This is the Heroic Voice, where I talk to comic book creators, people I've worked with, other interesting people, about the history of comics, superheroes, and the current state of the comic book industry. I also discuss current and upcoming projects, current events, and any other topics my guests might be interested in talking about. So subscribe and hit the like button. Help me grow this channel and promote indie comic book creators, publishers, and other people affiliated with the comic book industry. Your comments are appreciated. Get to it and leave feedback, good, bad, and otherwise. I am your host, Dennis Maloney, writer, publisher of the Heroic Multiverse, where we spotlight good girls, bad girls, super babes, and superheroics in a classic, kind of golden agey style. Grab some snacks and enjoy. This is the Heroic Voice. Welcome to the Heroic Voice. I'm Dennis Maloney, the publisher at Heroic Publishing Incorporated, the publisher of League of Champions and all of that stuff. This is going to be a little different because we're not going to be talking about comic books today. I'm putting on my economist's hat. You guys out there may not know that I actually have a degree in economics from Caltech, although I've never made much use for it, of it. One of my older friends here is Dennis Santiago. We've worked on a number of projects together over the years. He is what you might call a global risk and financial analyst. He is the chief operating officer at National University. No, not anymore.
No,
Oh,
no.
okay. But you are a commentator at Red State still, I believe. Redstate.com?
Yeah.
Yeah.
hmm Yeah.
So we want to talk a little bit about some finance, the current state of the banking system in this country. Dennis actually designed the risk analysis tool that the Fed, I think, currently still uses to determine whether or not small banks or even large banks are doing bad things that could cause them trouble down the road. Um, could you let me just impose on you for a minute, Dennis? Tell us a little bit about yourself and what you're up to these days, and your take on the current state of uh, finance in this country.
Oh, yeah. Well, yeah. First, let me do a couple of fact checks on
Sure,
you.
I got it
Um,
wrong.
uh,
Tell me.
well, these things move around so much. So, on the subject of where I am now, I actually um the COO, CFO, all that kind of stuff comes out of a consulting company that I own that specializes in executive services for corporations and nonprofits. And the organization that you were first beginning to refer to was one of the ones that was a client of mine where I served as chief operating officer. I have at this point in time another nonprofit where I serve as the chief financial officer. I have a for-profit in the solar business where I serve as the chief operating officer. And then I've got other various contracts for performing particular sets of services in terms of the financial dealings of additional entities. So essentially, I busy myself being everywhere these days, which is a little bit different from the single company environment where I first met you. I think we went through two companies together,
I might have been three. They were,
maybe three. Yeah,
yeah,
may have been three in the
there
old
were.
days.
It was
Yeah,
it was that auction site that Jim Kaplan put together. There
yeah.
was
So
that CSS, the financial company that
hmm
he operated, and I think there was a third one, but it
and
escaped.
then there was my company.
Oh yeah,
One of
yeah,
my old.
yeah.
Yeah, that was
So
the
it was
third one.
three. Yeah.
Yeah, where you worked there for a while, um, working on programming elements of the financial risk system.
That's
the
right.
that you
Yeah.
alluded to. And that's the second fact check. The system that I put together was a safe banking safety and soundness system that was served a contract by the Securities and Exchange
Securities and
Commission.
Exchange Commission. Okay.
Yeah,
Not the Fed.
that was our customer because they needed a system that paralleled what the banking system was doing at the time. Um, Main reason for that was because the rating systems used within the banking system are protected information and cannot be used outside of the
Right.
specific relationship between the regulator and the bank. The SEC is an entity that goes after banks in the open. And so they needed an independent eye calculating essentially the same information, but using only data that was
Public
publicly available.
information.
And
Right.
that's what they
That's what that was.
hired the company that I owned that you were working at to do. And that system is, interestingly enough, even after all these years, and even after I sold it to another company, still being used by the Securities and Exchange
It
Commission.
was a great system.
So
I mean,
it was, and it still is, and it's still living on. So, we did good work because we built that system, and it came to the fore in the middle of the 2008 financial crisis, and I think we did a lot of good with it.
I think so. I also still maintain it's maybe a little bit oversensitive, but you got to make
What do
decisions.
you know? Are you the analyst or me?
We also did some early
Yeah,
artificial.
your economics degree. Yeah, you really should have used it somewhere in your lifetime. You know that,
Yeah.
right?
We also did a little artificial intelligence, putting together like news articles, headline stuff. Very early.
Oh my God.
Yeah, that was.
Yeah, you were the programmer that did that with me. Well, it wasn't artificial intelligence, technically, right? We put together what's called an expert system, where an expert system is something
Very close
there
to that.
it's close, but not the same thing, because an expert system is deterministic in terms of what it will spit out. And
Right. That's the difference.
yeah, where an artificial intelligence system, you're really not sure what it's going to spit out because the entire AI algorithm basically it's trying to guess the next word to say in the sentence. But
Hmm.
we knew what words we wanted to say, and as a matter of fact, the system you're alluding to was kind of interesting in that um, it it created news articles for a subject within the financial news space that typically only had two articles per day coming out of the entire financial reporting system. And the system that we designed and worked on um, produced hundreds, if not thousands, of
Remember that.
micro stories every day. And the interesting thing about that system that made it particularly good or cool, actually, was that it had a built-in randomized persona generator that each article, in order to keep the articles interesting,
Right.
it would we set the system up so it would actually select a persona. We had a serious economist, we had a regular reporter, we had I believe that in the words that we searched for, we had somebody that was more Midwest in their character, and we just put in words that were more aligned with how people act coming from certain backgrounds and stuff. And we had, I think our most interesting one turned out to be the one that I based the selection of words on Alicia Silverstone's character
Oh,
in Clueless.
yeah.
Yeah.
I
So
remember tearing my hair out
it
over that, trying to randomize those things. I think I even
yeah. But that one was good because that one was actually interesting because the outfit that system fed into and created financial news stories for. And I don't know if you were in on this discussion at the time,
I don't think I
but
was. I think I know there's
no,
something
you
good.
weren't. But so I one but yeah, because one day I got a call from the editor in chief of the internet publisher, and he said he started off because the thing was going great guns. It was generating a lot of page views, every metric that you want out of a 19 mid 1990s internet play as far as information. It had found an audience and stuff like that. So the first thing he says to me is well, Dennis, can you cut back on those things? And I said, "Hey man, we're our objective is to explore how we get the maximum number of page views because we're getting paid by the click. And this thing's doing seems to be doing great guns, pulling stuff in." And he goes like, yeah, but you're putting out all these stories, and like thousands of them a day, and I got this whole newsroom of people writing stories, and they can barely put out like a couple of hundred stories a day. And I go like, well, yeah, that was kind of the point of the experiment that we were running. We were trying to figure out, innovative technologies where we could, scale into this, right? And we were, so we were talking shop about how internet information companies should work and position themselves and set themselves up with a technology base in the 1990s, late 1990s, I believe. Um, but ultimately he stops me and he says, "Okay, all right, fine. Here's the real problem." And he goes, um, "Our our phone number, people are calling the newsroom asking if they can ask for a date with one of your personas." And it was the Alicia Silverstone persona, to which I said, "It's like Max Headroom." What's not to like about that? And he says, like, we have no good answer to when people call up and go, "Hey, can I talk to that reporter?" I go like, "Put anybody on." Well, you want to put a girl on because it is a female persona. And he's just like, "Yeah, but they'll just ask her out on a date." And I go like, "Well, then she can just say no." I don't know
Oh,
that you ever heard that side of the
I
story,
have not
but
heard that side of the
but
story
yeah,
before.
I mean, but you because you were, working the computer program
I
part
did
of
a
it.
good job.
You did a great job. You did such a great job that people were falling in love with our robot, you know?
Well,
It
we
was
anticipated something that's taking place today then.
Yes. I mean, hey, and ours doesn't even swear like the AI ones do when you leave them on for 48 hours and they turn into like, unhappy teenagers. This one actually behaved herself. And, granted, right? We had many other personas in there, but ultimately, what got the newsroom was that people were calling up because they were attracted, which basically means that we had selected just the right mix of personality to inject into the articles in terms of the scripting that we were doing, and it was convincing.
Uh-huh. There's a
Yeah,
treatise
we
there.
passed the Turing test.
We did to some extent. There's a treatise in there for a psychology degree, if anybody wanted to investigate that.
Yeah, that was actually a lot of fun. And adventures into 1990. And remember, all this stuff was brand new back then. People had, we were, I believe, the average speed of the customers that were reading that stuff was dial-up 19.2
Right.
kilobaud,
People were
right?
still
You
using
know,
dial-up at the time. Yeah.
yeah, and so this was way before the arrival of and the general use of even early ADSL,
Hmm.
and certainly nothing like the bandwidth that you're able to get today.
We were
So
way
we
ahead
did
of
all
our
right,
time.
man. We were pioneers.
Yeah, absolutely.
Good for us.
Good for us. Banking system.
Yeah,
All right.
that was your treatise, right?
That was going to be my treatise before I decided I didn't want to get into stinking academics. I got really disillusioned when I did the research, in fact, on the Fed and found out, at least from my perspective, what an abomination that whole structure is. You may disagree with that, right? And you probably do. But I went back and looked at the first bank of the United States, the second bank. I looked into what Hamilton had in mind when he put the first bank together. Um, Going back even further, right? The first effort that was made to get a national currency was the Continental dollars. Back the Second Continental Congress issued those. No backing for it. Complete paper currency value, boom, plummeted within like 3 years. Everything was worthless. There was a man named Timothy Dexter back then who, because he was from a poor background, he was a farm boy, wasn't literate, but he had married rich, and he lived in a community with a lot of old wealth rich people, and they were buying continental dollars just to show their support for the revolution. So Dalton took in his head, well, if they're buying continental dollars, that must be the thing to do, right? So he started buying them. He bought everyone he could get his hands on, every single one, just threw away basically the entire fortune that his wife had. And then when Hamilton got in charge of the Treasury Department, he decided to throw a sop to all of those people who had bought, the continental currency notes. And he gave them a penny on the dollar. And Dexter rather, Timothy Dexter, I'm getting him confused with the James Bond guy, um, had been buying those up at really cheap, at less than a penny per dollar for those continental notes. So when Hamilton made that payout, he became extremely wealthy. He had so many of those continental dollars. Later on, and people can look this up, he did crazy things, stupid things like sending coal to Newcastle, which happened to arrive right when there was a miners' strike. So the cost of the coal went through the roof, and he made another fortune. Where he was living, there was a cat problem, right? So he decided, all right, people round up cats, I'll buy them from you. And then he sent them to the Caribbean as mousers and made another fortune. He had things like that happen all during his life, but I'm digressing. If people want to look up Timothy Dexter, they can find all sorts of information about him. He was one weird guy, but very
Well,
impressive.
today there are just as many weird characters
Oh yeah.
out there. Uh, Speculators and some of them have done remarkably well.
Well, anyway, the first bank of the United States was Hamilton's baby, right? It was basically a commercial bank that, issued notes. It was the only bank in the country that could go across state lines because it was a federal bank. There was no other federal bank. The state banks were not happy about that, as you might imagine, because there was competition coming from the federal government. So after 20 years, right, the charter was not renewed. It came down to one vote in the Senate and one vote in the House against it. So the first bank, charter went away. It disappeared after 20 years. A few years later, they started the second bank of the United States, which had a little broader um, mandate. Same thing, though. You know, um, Jackson really hated it because, and he was right about this, the existence of a federal bank was not authorized by the Constitution, and it created problems at the state level again. So when Jackson, became president, one of his first goals was to get rid of the second bank of the United States, which he did. And it wasn't until the Civil War that the federal government started chartering federal banks. They didn't create a national bank in the Civil War, but they started chartering federal banks. And within a span of a few years, I've got a note here, the number of state banks in existence between 1863 and 1868 fell from 1,466 to 247. There were 66 federal banks chartered in 1865, and by 1913, when the Federal Reserve came into existence, there were 7,473 of them. So basically, the federal government gobbled up the banking system during those, 5 decades or so between the Act of 1863 and when the Federal Reserve was chartered in 1913. Um, that's where I want to drop it right now because I have my own opinion about the Fed. I think that the Fed has been responsible for most of the booms and busts, which is ironic because the reason it came into existence was to try to mitigate all those booms and busts that had happened throughout the 1880s and the 1890s. They didn't do that. Um, they have two conflicting mandates that Congress has told them to do. They can't do both. It's completely impossible. And neither one of them is what a banking system should be doing. In my opinion, the only thing a banking system should be doing, besides taking in money and making loans and stuff like that, if we have a central bank, it should be stabilizing interest rates because interest rates are the cost of money, right? If you don't know what the interest rates are going to be 10 years from now, how can you make long-term plans? If you have a stable interest rate, you can. But that's a topic for some other time. What I'd like to get from you, since you do know about it, is what your opinion of the current state of our financial services industry is.
You learned this at Caltech, right?
Yeah.
Yeah, interesting. Yeah, no, I mean, no, yeah, no, it's a, um, well,
Hey,
there's a
Ed
perspective there.
Morrisroe, who was the CFO at Caltech at that time, was a genius. I learned a lot at his feet.
Oh,
So,
no, without a doubt. Now, from where you left it off, in the time period that you're talking about, um, the banking system didn't really grow much larger. I think it grew to somewhere around 11,000 banks total
that
that
sounds right. About right.
were, and they split up the bank regulatory system into three agencies that covered, at the federal level, covered, the all of the different kinds of banks, and that would be the Federal Reserve covers, one aspect of it. The Federal Reserve at this point in time is primarily responsible for the holding companies, which are the overarching owners of banks that are owned by, a banking corporation. Um, then there's the Office of the Comptroller of the Currency, which is part of the U.S. Treasury Department, which is primarily responsible for the larger banks, the national scale banks.
Right.
And then there is the Federal Deposit Insurance Corporation, which, has inherited essentially the largest number of banks, which are the uh, small banks, the
Financially
community banks
unsound
and all that
banks that
kind of stuff.
overextended themselves and ran into problems.
Well, um, no, not necessarily. I mean, the banks that ran into the biggest problems were the super big ones because they took the biggest risks,
Yeah.
at least in the 2008 timeframe. The little banks actually, a lot of them were just fine. Some of them did overextend themselves, but for the most part, even through the 2008, period, the I think the banking system was around when I had you come around working on it. We had, 8,900 banks in within the federal registration system. Individual what they call, individual certificate ID numbers. So, not much different from where your, academic studies, had left off in terms of the population of banks. Now, those banks, in terms of what we're looking at as, federal versus state, every single one of those banks also had to have licenses at the state level
Hmm.
that were controlled by. state bank licensing agencies with various names, whatever state bank authority, and then they've changed names over time, and they're still there. The bank licenses are at this point uh, for their state licenses are run through a system called the National Multi-State Licensing System, or NMLS is what it's called. That same system is what licenses mortgage brokers, real estate agents, all those kinds of licenses go through there. And but all of these state agencies that license individual financial institutions for the different kinds of lending that they do also get paperwork from them. And during the 2008 period, and even today, if a bank is shut down, um, it's just as likely that the agency that will go and shutter a bank if it were to fail will be the state authority. They'll be the ones that'll go if it's a bank that's wholly within one state, it'll be the state authority. If it's a bank that operates across multiple states, it'll be a federal authority that goes in there and does stuff. And then depending on the size of the bank, it'll be the federal authority, usually the FDIC, because there'll be a smaller one. If it gets to be a really, really big bank that's in trouble, then you probably look at a bailout,
Yeah,
which is
unfortunately.
the pattern that they had, which is their approach to stabilization, which may or may not make sense from a free market economy standpoint, but it is that's their version of stabilizing the systemic risks of the economy,
Yeah,
is they'll
it's the
prop
same
these guys up
principle.
with a lot of, I mean, when they prop them up, they put a lot of restrictions on them.
Yeah, they don't want
And
huge jolts to the economy, right? The whole quantitative easing stuff that the Fed was engaged in for, like almost 20 years falls in that category.
yeah, that was their way of preventing the system from doing
Base
a
plant.
what you would call a free market,
Yeah.
a proper free market correction.
The savings
Um,
and
but
loan debacle in the 70s, was basically the same kind of thing. The
they
Fed just,
did. There was a debacle in the 70s. There was a debacle in the 80s,
mhm.
also. And basically, there's a debacle a decade.
Yep.
That's the pattern of how things go. Right now, there's a debacle of mortgage lending going
Again.
on
Yeah.
again, right? But that's the mortgage lending business is it's like a roller coaster. It goes up, goes down, goes
Yeah.
up, goes down, goes up, goes down, and that's just part of a standard economic cycle. As long as it doesn't collapse everybody at once, it's not systemic.
And I was
And
worried. I've been worried
so
for about
trying to
30
keep it
years about,
isolated is the main thing that they try to do.
I've been
So
worried for 30
yeah,
years
but
about the
yeah,
student loans.
so
I mean,
yeah, so
that's
to
a debacle that somehow has been put off for a while. Yeah.
uh that's a different discussion.
Yeah.
And let's take it in that direction for a bit. Because that's more of a strategic discussion that people listening to it gets away from the structure and how the banking system is put together, and goes to the question of how is the banking system operated by the powers that be.
Let's
And
make this one quick, because we've covered pretty much all of
yeah,
the
yeah, yeah,
topics.
yeah, yeah, yeah.
Yeah.
And
Okay.
and this is kind of, like, and I don't know if this is what you wanted to be covering in the time you have together, but essentially, to that question, um, they muddle. This is the way they work. They basically, um, they don't really have a plan, nearest I can tell, in terms of where they want to go or everything. What they do is they're trying to stabilize whatever structure they've got, and their economic management model. Again, going back to your time as an academic is that their economic management model is to react as opposed to be proactive,
Yeah.
including things like quantitative. And whenever they say they're going to be doing something and going in a direction, that's already a reaction to something that's already occurred. They don't actually have any strategies to be proactive before the thing has taken place.
Well, the danger in being
Mostly
proactive is that you could cause the very thing that you're trying to prevent, right?
Well, yes, but then again, the reason you aren't proactive is because most of the economists that are working for you wouldn't know how to be proactive proactive their way out of a wet paper bag, right? Which is basically they basically come from an academic line of thinking, which is you react to the models, not inject anything into the models. There's a real reluctance to go and do that, and so yeah, we're stuck in a permanent cycle of reacting to externalities, as they like to call them, which are things that are imposed on them by other factors in the world that they just uh, I don't even think they try to anticipate them. They just try to do the
Deal
best
with
they
them when
can
they
with them.
come up.
Yeah,
Externalities
yeah.
it's difficult to incorporate externalities or even the possibility of externalities in any kind of model that you produce.
I
It's,
don't know. We did a pretty good job with that model that we made, and
yeah, but
I would
it's
I would inject
difficult then.
externalities into it left and right, and test them, right?
Mhm,
So they've tried to do that in recent years within their systems and what they call stress testing.
mhm.
So, which is a form of letting economists create externalities against which things can be tested on a theoretical basis.
Right. You
But the
change one
problem there
parameter.
again is the economists that they allow to create the scenarios. They're really, really dull. They really, they don't create a proper set of stress cases that take you all the way to the asymptotes of the and I'm sorry for using a word like that, but they don't stress the totality of the range that could happen, and they also don't do a very good job of figuring out how to stress innovations,
Yeah.
good and bad, that can impact the system. So they think in a too narrow frame, which basically means that the biggest risk to the banking system in the US is the fact that they're myopic.
Hmm. What would you say a confidence level is in these models? Is it as high as 50%? Does it go up to the 80th percentile that you can?
Well, no, I wouldn't put it anywhere near there. I mean, I've actually been in discussions where I will talk to the economist of one of those federal bank regulators or department of one, where they will swear up and down this is this is how it works and all that kind of stuff, and immediately turn around the next day, have another telephone call with the economist from one of the other federal banking regulators, and they spent half an hour on the phone with me going like, I don't know what they're talking about. That stuff is nutball. And academic debate
Yeah.
between federal regulatory agencies is alive and well.
Would you have, let's say that you were, given the chance to make some recommendations very quickly. What's the one big thing that you would recommend to our banking system that they aren't doing right now?
um I think they need to open themselves up to letting non-economists, to letting real data-driven analytics people um, have a much more significant input into what they're looking at. Basically, because that's probably the only way to properly safeguard the overall economy against what some of them will call tail risk, the invisible risk
Yeah.
element, or what other people will call the beta risk, which is also a euphemism for the invisible risk. They need to make that invisible risk visible, and that I think means that they need to go outside of the disciplines that they're comfortable with in order to look at such things. And that those skills exist. Those skills exist in other disciplines, high tech, risk analysis, artificial intelligence and artificial intelligence algorithmics, which can explore things from unpredictable patterns and stuff like that, which could add to the resiliency of the system. And it'll come up with stuff that will challenge the core economists, and then we'll see just how much their egos getting in the way of listening to data.
Okay. Dennis, I want to thank you for this. This, as I said, is a very different conversation. I hope people like this. As I say in the introduction, we talk to comic book people and other interesting people, and you definitely fall into that interesting people category. So thank you again. Any last word or thought?
No last words other than um, I really enjoyed going down memory lane to some of the things that we did in the past because you know what uh, for the people that are listening, like uh, uh, Dennis, you've done this country a great service in some of the computer programs that you have worked on, particularly in some of the ones that we were able to get into the right places in over the years, and that probably doesn't get recognized nearly as much as it should be. But I
It's
recognize it,
not
and
recognized at
I
all.
thank you for all
Nobody.
the work that you did over those years.
Thank you so much. Let's do something else soon.
All right,
Alrighty. Good night.
good night.